Global trade relations have seen a big shift since the beginning of the new U.S. administration. And joining us now to discuss the potential implications for investors is Kevin Hebner, Global Market Strategist with TD Epoch. And Kevin, thanks for joining us on the show. You do have a new report out, which I've read quite extensively. It does lay out a new global economic paradigm. Walk us through what's changing.
Okay, so there's a number of things that are changing, and I think it's very important to focus on the end game, where Trump is headed with a host of policies, rather than focusing on the random comments he or people in his administration make that can be very confusing. So, and I think it's also important to remember that 80% of this is about China, and China challenging the U.S. hegemony, the U.S. unipolar position. If you think of the different domains of power, whether it's economic strength, technological advances, or defense capabilities, China can challenge the U.S. in all three of those domains. Or really, certainly since the end of the Cold War, the U.S. has been unipolar and really unchallenged in all these areas. So it's how U.S. policies are changing in response to the rise, the heft in China, and the type of new world order that we're going to be experiencing. And so it is a dramatic shift, the biggest shift in the global economy we've seen in 35 years. And as a consequence, uncertainty has increased a lot. And there's a number of different ways to be thinking about this. Global economic uncertainty, as we can see in this chart, is at certainly the highest level it's been, say, in 30 years, even higher than COVID or the global financial crisis. And the view is that as we go through this transition period, the heightened level of uncertainty and volatility across asset markets will continue for quite a while. Now, this chart shows it's not just Wall Street uncertainty, but Main Street. So the small business uncertainty index, it's at the highest it's been since the mid-'70s, and probably beyond that, and again, even higher than COVID and so forth. So it is small businesses where most hiring, most of economic activity plays, they're really feeling this uncertainty. It's not just a Wall Street issue.
Okay, and talk to us about how U.S. policy is driving this, and what are Washington's end goal?
So the end goal is to recreate the global economic order, which Trump thinks has not been very fair to the United States. And from his perception, the United States has given countries free access to the U.S. consumer, free access to the U.S. defense umbrella. In return for that, the U.S. has asked for nothing. And he thinks the consequence of that, one consequence has been an enormous trade deficit in the U.S. It's about $1 trillion. Also, it's resulted in the manufacturing sector in the United States being wiped out and rising income inequality. And then on the defense side, his view is that because the U.S. has stepped up so much in defense, 64% of NATO defense spending is just the U.S. So it's by far the majority of defense spending. Everyone's been allowed to free ride on that. So that would be Canada, most European countries, and so forth. And these are things that he wants to correct.
Talk to us about the implications for Canadian investors who are really trying to navigate this very uncertain environment.
Yeah, so in terms of the tariffs that have been imposed and threatened on Canada, most of it is try to gain leverage for negotiating a deal. So Trump loves negotiating a deal, and he does think that the deals that are currently in place with Canada, Europe, and so on are unfair. 80% of this is about China, so it's not primarily about Canada. So he does want to have tariffs and have the threat of tariffs so that U.S. trade negotiators have real leverage when they're dealing with Canada and other countries. And the thing that the negotiating team from Trump's first term complained about is they entered negotiations, they had no leverage. So they would talk, and talk, but at the end of the day, it was very hard to accomplish anything with any of their counterparts except for China. So this time they want to have the tariffs so they have leverage, and then they can negotiate a number of different changes in the relationship with Canada, Europe. But the big focus of all of this really is China, and that probably won't happen to maybe in the summer, maybe even beyond that.
And clearly we're seeing it's having some implications on the markets. What are what other implications do you see for the markets given all this uncertainty around trade and the tariffs?
So I think narrowly we can think of the United States and Canada are going to have lower growth, higher consumer prices, greater volatility. That is a challenge for investors. It means diversify. Don't just hold U.S. equities. Don't just hold Meg 7. Don't hold just equities, but diversify into sovereign bonds, private credit, commodities, infrastructure, and areas like that. I think that's extremely important. Diversification, in particular, when there's so much uncertainty, is important. It's also critical to be focused even more on fundamentals, free cash flow, shareholder yield, return on invested capital, the fundamentals of investing, given all the uncertainty. And that sounds a little bit paradoxical, but when there's so much uncertainty, when we're going through this transition period, you want to be even more focused on fundamentals that drive returns.